is my prognostication on gold. So this is the weekly time frame. Okay. And reason why I use the weekly one is because on the daily there were so many lows you can easily get lost. And so I use the weekly because there are less candle, a lot less moving parts. So I use the weekly to kind of give me a better perspective on how to set up the Fibonacci. Again, like I said, the Fibonacci is not the end all be all. It is not the secret sauce, but it can definitely help. It's like a speedometer in your car. Okay, let's dive into it. So why did I use this low? I use this low because this one right here is when price go up, and then before all this candle, there were not any sudden big movements, right? So you have this drop price, and then boom, that candle on April 11, we have a big up candle. And I would almost say since then, no other candles dropped below half of it. It traded below it, but the bodies remain above that candle here. This candle right here. So it's more like of a, if you want to call it a support. So this candle is acting like a support. This is like a breaker, but as the new day start, here, a lot of back and forth, especially in this level, in this area, and price, bam, take out the stop loss right there at that level of 32.85. And then since then, price has been going sideways. The only time price break below or traded below half of that candle is with that candle. So to me, that candle is more significant than any other candles here. If we had a drop and then we had a long candle, like if these two candle could have been just one candle, then yes, I would have put my fib right there below. But we had some very good ride here, but it's not significant as this one. So that's why I use that low right there. And to confirm that this is the right low to put your fib, when you're looking at all these green candles that are going up, what do you see? Very small gaps. They are not that connected, right? Here, we have the bodies interlapping with this body. Okay, cool. We had a small one here as well. And then this one, we have a lot of bodies overlap. And let me zoom in a little bit more. So we have price come open up here, went up. Again, price open up here, went up again. So that's on the weekly. So we're looking at the weekly time frame. So there are some overlaps here. But here, no overlaps. Definitely no overlaps. And this one price is just retracing lower. If there are overlaps, that means it's trading efficiently. If it's trading efficiently, that means it's at the 50%. So if I put my fib here to the highest high here, and my 50% is lining up with an area where price has traded efficiently, that means I had the fib location correctly. But if I were to drag that fib for the 50% to end up here, this is where the low of the fib will be. I mean, would you trust your fibs to be here? Not really. So this is why I say using that Fibonacci right here, it's more than likely. So once we have that figured out, and we identified the area of efficiency, which is at the 50% here, and we have the right fib, the right low, the right high. Getting the high was easy, we can see that, but it's getting the lows was a little bit harder. What do you do next? Well, price usually tend to go from premium to discount. So right now we are at a premium, okay? And then to short it to go much lower than that. On the daily time frame, these areas that are traded efficiently, which is for the week of September 5th, and September 12th, and the week of September 26th and October 3rd. So I highlighted those here, and I will show you the difference. Now you notice which part is more traded efficiently. This side here, where you see a whole lot of candle clustered within each other, or this one. There's a lot more candles that are clustered within that box here than this box. So this area right here is traded more efficiently than this area right here. So another confirmation on the daily, mind you, that shows you that yes, the fib is at the right level. Right now on the daily, as you can see, they have a big drop, which is right here. This is a break in market structure and price trying to return inside that gap, and nah, did not happen. Price is so weak, could not even get inside of that gap. Drop, another drop. It's gonna keep going up.